Have you ever felt like you're just guessing when it comes to your investments? Well, what if there was a repeatable, rules-based way to spot the market's strongest trends, before everyone else does? In this explainer, we're going to break down a framework that professionals use, and it works whether you're investing for the long haul or trading for shorter-term gains. It's really all about learning how to read the signals the market is giving you.
So let's start with this core idea right here. It really doesn't matter if you plan to hold a stock for years or just a few weeks. At the end of the day, the fundamental goal is exactly the same. You're hunting for momentum, and you're looking for market leadership. Because the big returns, they're driven by powerful trends, and the principles for spotting them are surprisingly universal, no matter what your timeline looks like.
Okay, so how do we actually start to gauge that momentum? Well, our framework begins with signal number 1, which is a really dynamic tool that's designed to measure a stock's current velocity. You can think of it as an instant read on its power in the market right at this very moment.
This first tool is called weighted alpha. Now, at its core, it's just measuring a stock's performance over the past year. But the real key, as you might guess, is in the name itself, weighted. This isn't just a simple average. It puts a much greater emphasis on the most recent price action. And that weighting is what makes it such a sensitive indicator, because it tells us not just if a stock is going up, but how powerfully it's accelerating right now.
So here's the crucial takeaway. When you see a positive, and even more importantly, a rising weighted alpha, that's the market sending a very strong signal. It's telling you that this stock has powerful, positive momentum. It suggests that the trend isn't just healthy, but it's likely being driven by real, sustainable market leadership, which is precisely what we're looking for.
But momentum by itself can sometimes be a little misleading. Think about it. A car that's accelerating is one thing, but is it just starting its journey, or is it maybe about to run out of gas? That's where context comes into play. And this brings us to our second signal, where we need to combine that speed with a little bit of perspective.
And here's a really easy way to visualize that relationship. Think of weighted alpha as the speedometer in your car. It's showing you your current acceleration. Now, the 52-week performance, that's like the odometer. It shows you the total distance the car has traveled over the last year. It's only by comparing these two things that we can get a much deeper, more complete understanding of the trend's overall health. And here's how that comparison translates into a really clear signal for us. If a stock's weighted alpha is higher than its 52-week performance, it means its recent momentum is actually stronger than its yearly average. The trend is accelerating. But on the flip side, if the weighted alpha drops below the 52-week performance, that's a potential warning sign. It's telling us there's some trend fatigue. The stock might still be positive overall, but it's clearly losing some steam.
So now we have momentum and we have context. The third step in this whole process is about confirmation. You see, a truly powerful trend won't just whisper through one or two metrics. It will shout through a whole consensus of technical indicators. It'll paint a unified picture of strength that's hard to ignore. This brings us to a neat tool called the Barchart opinion. What it does is it distills 13 different technical indicators, from the short term to the medium term all the way to the long term, into one simple consensus rating. So when you see a 100% strong buy, that's a pretty powerful statement. It means every single one of those 13 signals are aligned, all pointing to a unified and robust trend.
And what's really critical to understand here is how it's built. This consensus opinion is weighted more heavily towards the short-term indicators. And why is that? Well, because any significant change in a primary trend, whether it's just starting to strengthen or maybe beginning to falter, it will always show up in those short-term indicators first. This makes the tool a leading indicator, which can give us a very valuable early heads up. And for our final layer of confirmation, we use a very simple visual tool called the Trend Seeker. It's really just designed to cut through all the noise and give you an immediate, at-a-glance assessment of the trend. It quickly tells you if the stock is in a clear uptrend, a downtrend, or if it's just kind of stuck moving sideways.
Okay, so with all these individual signals in hand, we can now assemble them into a powerful, straightforward checklist. This is really where the theory becomes practice, and it allows us to spot those high-potential opportunities where every single signal is giving us a clear green light.
So let's put this checklist into action with a real-world example using Merck. As we go down the signals, you can see it gets a green light across the board. Its weighted alpha is beating the broader market benchmark. The momentum check confirms that it's actually accelerating. The Barchart opinion is a unanimous 100% strong buy, and the Trend Seeker confirms it's in a clear uptrend, making new highs. This is the exact picture of perfect alignment that we're hoping to find.
Of course, this framework is just as powerful for identifying risk. The absence of a green light is in itself a crucial signal. So let's pivot for a moment and look at what happens when these signals begin to diverge, because that tells a story of caution rather than conviction.
Now, let's take a look at Nvidia, a stock that has been an absolutely incredible performer. You'll notice that its top-line signals, the weighted alpha and the momentum check, they're still looking good. But look a little closer at the warning signs. The Barchart opinion is starting to flash a short-term sell signal, and that's the first crack in the technical consensus. And then the trend feature shows the price is now moving sideways, failing to make new highs. This divergence is the market telling us that while the long-term story might still be strong, the immediate momentum is fading, and that is a clear signal for caution.
So by putting all of these pieces together, you're no longer just looking at a bunch of individual data points. What you're really doing is building a personal signal dashboard. And this isn't about predicting the future. It's about creating a disciplined, data-driven process for making decisions with clarity and with confidence.
Let's just summarize this whole process into 4 clear, actionable steps. First, you scan for candidates that have a strong weighted alpha. Second, you confirm that their momentum is accelerating by comparing it to the 52-week performance. Third, you seek out that crucial technical confirmation using tools like the Barchart opinion and the trend seeker. And then finally, step 4, you continually monitor this dashboard. This process lets you stay with the strong trends while also recognizing those early signs that risk might be increasing, and it helps you remove emotion from your decisions.
So we'll end with this question for you to think about. When you see every single one of these signals, the momentum, the context, and the technical confirmation, when you see them all aligning perfectly, it's really more than just a series of data points. What's happening is the market is telling you a powerful and unified story, a story of strength, of leadership, and of conviction. The key is simply learning how to listen.